Many traders have experienced the following: you are using a strategy to determine when to enter into positions, you see that all of the conditions to enter into the position have been met, along with this you are trading with the trend, making the likelihood of the trade going in the right direction and being profitable even higher. However, as soon as the trade has been placed, the price seems to be going in the right direction, but then after new candlesticks form, the trade reverses and starts going in the opposite direction. Now you might be thinking, why did this trade go in the opposite direction? The answer to this question is actually really simple. Even though the indicator signaled that it was a good time to enter into the position and you were trading with the trend, the volume in the market was likely working against you. Let me explain further. Despite the price appearing to move in a bullish or bearish direction, there are instances where the volume supporting that movement is relatively low, meaning there is not enough sustained buying or selling pressure to sustain the price movement. This lack of substantial volume can lead to sudden reversals or price retracements, causing the trade to go against your initial expectations. From this, we understand that volume is the key to avoiding false signals and becoming a profitable trader. So in today's video, we will be going over the top 3 best volume indicators that you can use to avoid these false signals. The first indicator we will be looking at is the volume fight indicator. Head over to the indicator search tab and search for the volume fight indicator. Select the indicator made by Shuttle Club and add it to the chart. The volume fight indicator divides the trading volume into 2 parts, the bullish volume and the bearish volume. By comparing the weighted average of these values, the indicator determines the predominance of either bullish or bearish volume. The indicator has 2 main components, the first of which is the volume difference area. The green zones within this area represent bullish volume and the red zones in the area represent bearish volume. The gray zones, also known as flat zones, represent periods in the market where there is no predominance of bullish or bearish volume. The second component of the indicator is the triangle, which is plotted every time the predominant volume switches between bullish or bearish. If we head over to the Indicator Settings tab and click on the Input Settings, we can see the following. The first setting that can be changed is the search range. This refers to the amount of candlesticks that should be used for the look-back period. As you can see, if we increase the value of this setting, the volume will be shown for a longer term. However, if we lower this setting, the volume will be shown for the short term. In general, it's common to use a high search range on lower time frames. The second setting is the smoothing percentage for the flat zones. As you can see, by changing this to 0, there will no longer be any flat zones. However, the signals will be a lot less accurate and precise. If we increase the value, the flat zones will be more prominent, causing for less accurate but more precise signals. Since we want to find and use a good middle ground, let's change the settings back to default. In order to better understand the volume fight indicator, let's showcase some entry examples with the indicator. In order to do this, we will first add an extra indicator to the chart. Head over to the Indicator Search tab and search for the SSL channel indicator. Select the indicator made by Beckers and add it to the chart. The SSL channel indicator is a simple buy and sell indicator that consists of 2 lines. A buy signal is given whenever the green line crosses above the red line. On the other hand, a sell signal is given whenever the green line crosses below the red line. Now that we know how all of the indicators can be read, let's take a look at how we can combine the indicators. As you can see here, the price is moving in the downward direction. Along with this, we can see that the SSL channel indicator gave a sell signal due to the red line crossing above the green line. If we take a look at the volume fight indicator, we can see that it is red, showing us that there is predominantly bearish volume in the market. Because of this, let's enter into the sell position. We'll be placing the stop loss at the recent swing high. For the take profit, we will be targeting a 2 times risk to reward ratio. Now let's see how the trade plays out. Here we can see that the SSL channel indicator provided a sell signal. However, since the volume fight is green, we will ignore it. We can see that after the sell signal was provided, a buy signal appeared. Along with this, we can see that the volume fight indicator is still green. So let's enter into the buy position. We will be placing the stop loss at the recent swing low. For the take profit, we will be targeting a 2 times risk to reward ratio. As you can see, it was good that we were able to avoid the sell signal and instead enter into a buy position due to the volume fight indicator. The volume indicator in second place is the squeeze index indicator by Lux Algo. But before that, I am currently hosting a Bybit trading competition with a prize pool of up to $1,000 where the first place gets $500, and the second place gets $300 and so on. If you are interested in joining and earning, click the link in the description to join. Head over to the Indicator Search tab and search for the Squeeze Index indicator. Select the indicator made by Lux Algo and add it to the chart. This indicator showcases whenever the price action is squeezing. During a squeeze, the price is compressed within a tightened area, which indicates that the price will be stationary during this period. Price breaking out of this area will generally indicate to the trader whether to buy or sell, depending on the breakout direction. This means that we shouldn't take trades while the squeeze index is above the 80 level. Instead, we should wait for the squeeze index to cross back below this level before deciding which direction to open a position in. If we navigate to the Indicator Settings tab, we can also see that the convergence factor and length of the indicator can be changed. Changing these values will cause for the sensitivity of the indicator to be changed. Now that we know how this indicator works and can be used, let's take a look at entries that can be made with the indicator. We will be combining the squeeze index with the vector candles indicator. The vector candles indicator with PVSRA is designed to help traders visualize climax and above average volume candles on the chart, which can indicate potential trend reversals and significant market moves. The line candles indicate high bullish volume and the red candlesticks indicate high bearish volume. This means that we can use these candlesticks to determine the breakout direction. As you can see here, the squeeze index value just crossed below the 80 line. This indicates that the market might break out. If we take a look at the price action, we can see that this price level has been previously used as support. Along with this, two bullish vector candles formed, indicating that there is a large amount of bullish volume. This means that there is a high likelihood of the breakout being bullish, so let's enter into the buy position. We will be placing the stop loss at the recent swing low. For the take profit, we will be targeting a 2x risk to reward ratio. Now let's see how the trade plays out. Here we can see that the squeeze index value has crossed below the 80 line again. This time we can see that the price level that was reached was previously used as both a support and a resistance point. Because the price has rejected this level, we can assume that the price used it as a resistance level. Additionally, two bearish vector candles have formed, suggesting a significant amount of bearish volume. These factors point to a high probability of a bearish breakout, so let's enter into the sell position. We will be using the previously showcased risk management and take profit targets. This indicator can also be combined with the premium Lux Algo buy and sell indicator. Based on the signal given by the buy and sell indicator, we can determine the direction of the breakout. If you are interested in getting access to the Lux Algo premium indicators, check out the link in the description to get them 30 days risk-free. The final volume indicator we will be looking at is the volume profile with buy and sell pressure by friend of the trend. Navigate to the Indicator Search tab, search for the indicator and add it to the chart. This volume profile indicator shows the volume traded for each bar and is colored according to the difference in buy and sell pressure. As you can see, the bars have the following colors: green, which indicates that there is more buying pressure in the market, and red, which indicates that there is more selling pressure in the market. There are also blue bars. These indicate an equal amount of selling and buying pressure at that bar. If we head over to the Indicator Inputs tab, we can see that the moving average length can be changed. The moving average is the blue line that is plotted on the indicator. By changing the value of the moving average, you can adjust the sensitivity for the filter. Now let's take a look at entries that can be made with the indicator. We will be combining this indicator with the previously used SSL channel indicator and a yellow 50-period EMA. We can see here that the price is trading above the 50-period EMA, showing us that the overall trend is bullish. If we take a look at the SSL channel indicator, we can see that a buy signal was provided due to the green line crossing above the red line. Finally, we can see that the bar on the volume profile is green. Along with this, we can also see that it's greater than the blue moving average line, showing us that there is a high amount of bullish volume in the market. All of these signals indicate that it's a good idea to enter into a position, so let's enter into the buy position. We will be placing the stop loss at the recent swing low and targeting a 2x risk to reward ratio. Upon taking a look at the price action, we can note that the price is trading below the 50-period EMA, indicating a bearish overall trend. Turning our attention to the SSL channel indicator, we can see a sell signal triggered as the red line crossed above the green line. Furthermore, the volume profile bar is red and exceeds the blue moving average line, suggesting a substantial amount of bearish volume in the market. All these signals converge, suggesting it is opportune to enter into a sell position. We will set the stop loss at the recent swing high and aim for a 2 times risk to reward ratio. I hope you guys understand the significance of volume in trading and how you can integrate these indicators into different strategies. Keep in mind that the strategies shown serve as examples of integration and should be tested before implementation in real markets. If you found the video helpful, please like and subscribe to the channel.